Hello, everybody. Welcome to Money in Trends webinar brought to you by Kentrade, supported by Wealthfort. And we are starting the webinar in a short while. So in the meantime, let's wait for more people to come into the room. So if you can hear me on the webinar, please type yes in the chat box. Okay, if you can hear me and see the screen, see my screen, see my webcam, yeah, please type yes in the chat box just to check if the internet is working. Okay. Okay, many yes. Loud and clear. Awesome. Okay, we have a few hundred people on the line right now. And I want to welcome you to come to our Money in Trends webinar brought to you by Kentrade, supported by Wealthfort. My name is Shane Chu. I'm the moderator for this webinar. So it will be a 60 minutes content and 15 minutes question and answer. And today we are very excited to invite a speaker, Jin Hao, all the way from Miri, to share with us his strategies in money in trend following. Okay, so let's begin. Now, disclaimer, whatever we share in this webinar is only for educational purpose. In no way that we give you any recommendation to buy or sell any securities or any stocks. So if you decide to do any buy or sell decisions after this webinar, you do it at your own risk. Okay, you're 100% responsible for your financial decisions. So Kentrade has planned a series of webinars for you. This is the second webinar for this year, Money in Trends, which will talk about trend following strategies. And then the next webinar will be very interesting. We'll talk about, is the 11th year US bull market finally coming to an end? So it'll be done by a speaker from Singapore. His name is Derek Tang, okay? And then we have the whole series until the end of the year. So stay tuned for more of our Kentrade webinar. Now, before we go to the content, allow me to introduce our esteemed speaker today. And Jin Hao is a trader in the capital market, trading equities and futures, mainly in the Malaysia, US, and Hong Kong markets. He has at least 8 years of experience, if I understand you correctly. So he's the founder and chief master trainer of Street Finance. He's also the founder of this signature program called Street Trader Intensive Program. Okay, he speaks regularly for investment banks at universities as well as private entities. He runs his own program as well as he trains retail clients for the stockbrokers and investment banks. He's also often featured in media such as City Plus FM and Borneo Post. Okay, regular guest on the media. So today we are very excited to learn from you how to do trend following in the markets. Are you ready, Jin Hao?
Yes, I'm ready.
All right, can hear you loud and clear. Okay, so over to you, Jin Hao.
All right. So
you may share your screen.
Okay, give me a minute. All right. Can you see my slide in full screen right now?
Yes, perfect.
Okay, thank you very much. All right, so welcome everyone. I'll just get started because I've prepared a lot of things today for this webinar, and I actually prepared this webinar like early this year. So during that time, the market has not crashed yet. So we all know what's happening in the market right now. I don't have to explain further. All right, so, and this content outline I actually planned few months ago. And let me just quickly go through. The first thing you are going to learn is the only thing we need to know in order to profit from the stock market, which is trend. And that's what I do, trend following. Okay. The second thing is understand how it works and learn how to identify trends. And last but not least, you're going to learn how to set your trading plan, including the entries, stop loss, and trailing stop. Now, I know that a lot of you would like to know how to actually, how should traders actually behave, or what should we do as a traders during this kind of market situation? Okay, so that would be after I have gone through this strategy part, and I will share with you my opinion in the market right now and what are the ways that you can actually profit from the market, or you would like to know when can you actually start buying shares and what are the things that you need to like take care, okay, while trading in the market like right now. Okay, so without further ado, let's get started. All right, now, before that, I want to just start with a very quick activity. Let me know, okay, type in the comment section, okay, which of the following stock will go up. Now, I'm going to share 4 stocks to you without the name, of course, okay, and you type in the comment section which stock will go up. I will share with you stock A, B, C, and D. All right. So after that, you let me know which one will go up. Okay. So are you ready, everyone? I'm going to share with you 4 charts. Okay. And from that 4 charts, you're going to pick one stock. And out of that 4 stocks, only one stock will go up. All right. Let's get started. This is stock A. All right. This is stock A. And this is stock B. Okay. And this is stock C. And this is stock D. All right. I'm going to share with you one more time. Okay. This is stock A. And this is stock B. This is stock C. Okay. Pay attention to the patterns of the chart. And this is stock D. Okay. The last one is stock D. All right. So only 1 out of 4 stocks is going up. So have you selected your answer?
Okay, I see there are a lot of answers already. Okay, just maybe we give you another 5 seconds to type in your answer. Okay, let me review to you. Well, almost 100 plus people reply. Okay, so
Very active.
yeah, so we have, I would estimate from my reading, majority pick B. 80, more than about 80% of people select B, and then maybe
Okay.
10% pick A, 10% pick D. Okay.
Okay. No one likes C.
Yeah, I have not seen any
Minority.
C. I have not seen any C so far. Maybe I scroll too fast. Yeah, so
Okay.
far 80% pick B.
Okay. So actually, if you guys pick B, I think these people are not beginner. Okay. I know it's out of luck or you really go and analyze the chart, but let me review the stocks and how they behave after the masking part. Okay. All right. So, oops. Okay, stock A is Maybank. So after 2019, it continues to go down. Okay, so stock A is Maybank. Stock B, congratulations, that's Franken. Okay, one of the most profitable stocks in 2019. Okay, and stock C is Public Bank. Okay, Malaysia, also one of the Malaysian favorite stocks, okay, after Maybank, I would say, okay. And last but not least is Air Asia, okay, Air Asia. So how do you actually know by looking at the chart, okay, which stock will have high probability to go up and which stock will have higher probability to go down? It is actually by looking at the trend. is actually by looking at the trend. So, and as a trend follower, we believe that uptrending, anything that is uptrending has higher probability to go up, okay? And anything that is downtrending has higher probability to go down. So we only focus in stocks that are uptrending, okay? So this is what trend following is in a nutshell. We follow the trends. And many traders actually stuck in this scenario. Let me see if I can draw something. Okay, cool. Okay, so when the stock is dropping, you see, it is crashing. And when something is crashing, people will automatically, because we are all human beings, and I would say intuitively, we kind of think that when something is falling in price, it is cheap. And when something is cheap, it is a good buy. Okay. A good buy as in good B-U-Y. But for trend followers, we say good buy, B-Y-E. Okay. So when something is crashing, this is what many traders will react. Okay. When something is crashing, it's crashing. Opportunity has finally come. And this is what really happens during the recent crash. Okay, I'm talking about the recent crash right now. A lot of people behave like this. It is crashing. Opportunity has finally come. And when it crashes some more, they say crash again. Be greedy when others are fearful. And they'll just say, I'm in. Okay. After they buy, they feel like they are Warren Buffett because everyone is panicked and they are buying. And after that, it continues to crash. Okay. Let's share some Warren Buffett's article. The legend is still buying, so I have to buy more. I literally see a lot of people in those public Facebook group and even in among my friends, okay, they are buying airline stocks, they are buying like banking stocks, and they are buying like oil and gas stocks because Warren Buffett invests in some oil and gas stocks, those shale oil companies, and Warren Buffett bought airline companies many years ago. Okay, and after that, when the price keep crashing, okay, it comes to a point they will say it is good to have stop loss because by the time they have already lost like 40, 50%. Okay. And a lot of people got margin call for doing this, especially those who of course, for those who leverage. Okay. And when people cut loss, and that's when after that it goes up. And when it goes up, those people will say, trust me, the market always cheat us. Okay. You see rebound, you buy. You see last time rebound, after that it crash again. Okay. Technical rebound. This is a dead cat bounce. Well, we don't know. Okay. Recently, the market has some rebound. Okay. Later, I'll share more about my opinion. After that, it goes up again. And then they will, because they have lost confidence in the market. They have lost confidence in the market. So don't buy. It's a trap. The market is still now a crisis. After that, it goes up. They don't know they don't know why they actually miss everything. They don't know what they are doing, and they lost money in the market. They don't have confidence towards the market. So this is what many traders actually how they're stuck in this scenario, because we are using too much of our own opinion in the market. Okay. So how about trend followers? Okay. How about trend followers? This is what we do. If you understand trend following, I say in a downtrend, the stock or anything else has higher probability to go down instead of going up. So we know that if we are a buyer in the market, we want to buy stocks, we cannot be trading in a downtrending stocks. We don't have an edge in the market, in the stock or the market when it is downtrending. Okay. Now, can you make money in a downtrend? Of course, yes. How do you make money in a downtrend? Let me show you. You buy here and you sell here. You buy here and you sell here. You buy here and you sell here. That's how many people try to make money in a downtrending market. Let me know, is it easy? Okay, that's what a lot of people try to do. They try to contra, okay, and then they hope that like the stock go up by 5 cents, and then you sell and you make quick profits with no money down. Okay, not your money. We're doing contra, of course. Okay, so it is not easy to make money in a downtrend by being a buyer, unless you are in like maybe you're trading US stocks, Singapore stocks, Hong Kong stocks, whereby you can short sell the stocks, okay, for a period of time. Now, if you understand trend following, we follow the trend and we don't look into buying when it is in a downtrend, because we don't have the edge in the market. Okay, so if you understand trend following, we only look into buying when the stock or any securities is in an uptrend. So how do we know something is in an uptrend? So you see, an uptrend, the definition is higher high, higher low. I believe a lot of people actually know about this. Okay, so when is the time we should start, or we can start to buy shares after a downtrend? Okay, because right now a lot of stocks are like having mega sales and it is very attractive, but you never know whether it will continue to fall or not. Okay, so how can we tell if there's a uptrend? We want to see. Okay, now let's look at this illustration in the slide here right now. You need to have higher low, okay, and then after that you need to have higher high. So this is more like a same high, so the next higher high is this one. So when it forms higher high, when it comes down and rebound, that's one of the time, okay, one of the strategies that you can apply. You buy after the dip, okay, you buy after the dip when it starts to rebound and show you any signs of recovery. Okay, so that's what we do in the market. Okay, that's what we do in the market. So let's continue. Okay. Right. So remember this, the trend is your friend until it bends. And if I want to add one more thing, it would be, okay, there is no too high for a bull or too low for a bear. So, okay, now, last year, when I was in stocks like Franken and Penta. Now, because Franken, it started like the uptrend is like from actually 70 cents or 90 cents. I first bought Franken at 96.5 cents. Okay, I hold all the way to 130 plus, sell off. Okay, because I did some mistake. Okay, I sell off and I did not buy back immediately after the rebound. I missed one wave. I re-enter at 133 or 134. And after that, I hold all the way until 2 ringgit plus. Now, a lot of people always say, now the stock has gone from 70 cent to 1 ringgit 40 cent. It is 100%. We humans should not be greedy. Okay. Well, yes, we should not be greedy, but we are just following our strategy. Okay. So that's the thing. There is no too high for a bull. As a trend follower, we always wait until the trend bends, then only we sell. Then we acknowledge that that's the highest part. Okay. And there's also no too low for a bear. This is last year. Okay. A lot of people say like stocks like UWC, Great Tech, those are crazy. Okay. Revenue, crazy. They say a lot of things they say like Zufu, high flying. Okay, it is illogical. Yes, it is illogical, but don't forget that the market is never logical. And there's also no too low for a bear. A lot of people ask me since last year, Maybank can buy or not, Public Bank can buy or not, okay, Air Asia can buy or not. Okay, so that's the thing I want to share with you. A downtrend is a downtrend. There is no too low for it to go. Okay, and for a bull, there's also no too high. All right. So these are the things that you have to remember. That's the I would say that's the core belief of trend following. Okay, so look at the slide here. We ride the trend until it bends. So as you can see here, this is Franken. We hold all the way until the high, and then it hit our trailing stop. Later I'll demonstrate to you what is trailing stop, and then we sell. Now, let me share with you something. I buy Franken around 96 point. Should be somewhere around here. I accidentally sold off here, okay? And I buy back here. Okay, now let me ask you something. A lot of people say, you see, because when you look at the chart in a retrospective manner, now the stock has gone from like 60, 70 cents all the way until 1 ringgit 40 cents and more than 100%. And we will always think like, wow, it is overvalued, wow, it is too high. Okay, and people is like, Jin Hao, you are crazy. Why are you still buying? The thing is, if the primary trend is still an uptrend, it has higher probability to go up. And guess what? It just go all the way higher. And those people who buy, okay, who buy maybe here or here, okay, maybe they buy lower than me, I don't know, okay, and they sell at, maybe they sell at like 140 or 160. Now, yes, the moment you take the profit, you feel very happy because you have 100% of gain or 150% of gain in your pocket. That feels really good. But we are all human. We have emotion. Please don't tell me you buy a stock at like 80 cents and you sell at 160. Okay. And when the stock goes to 2 ringgit, you have no emotion. That's impossible. Okay. We are all human. All right. Unless you can forever don't look at the stocks again, which is kind of impossible. So what we do is we wait until it has some kind of like structure break, okay, then we sell. So initially, if you plan to sell at 140 or 160 or 180, okay, and after that the stock go up to 270 and come back down, you sell at 240. Are you happier? Okay, this is what we do. We wait until the trend to go as high as it can, and then when it falls, we acknowledge that this is the high, and then we start trimming position. Okay, same goes to stocks like Penta, Greatech, UWC last year. Okay, that's what a trend follower actually do, and it works in all stocks, all markets, all instruments. Okay, last year I traded FCPO. It goes all the way until 3100. Okay, that's crazy. Okay, I start position since 2400. All right, so that's another crazy opportunity there. All right, so now, what about a sideway? We know about uptrend, we know about downtrend. Okay, downtrend, we don't buy because we don't have the edge in the market. Uptrend, later I'll share with you how can you actually enter the stock when it is actually high flying and it looks crazy to even enter the stock. Okay, now, what about sideway? Now, just look at the slide first, okay? When a stock is in a sideways trend, it is spending some time to choose a direction. The stock doesn't know whether it wants to go up or down. It's taking some time to choose a direction. You're looking at Tesla. Okay, you're looking at Tesla, one of the stocks that we made some profit early this year. Okay, and here you can see, okay, here you can see that the stock, okay, is breaking this side. Now, it actually, at first, it went downtrend first. And after it go up, here is a resistance and break the resistance, go uptrend and break out. So this breakout is where you should start looking at the stock because the stock has finally break from like this 3 years resistance. Okay, that's the 3 years resistance from that particular sideway. So when it breaks the major resistance with a series of higher highs and higher lows, we know that it is an uptrend. So that's when we start buying. And when should we sell? We exit when the trend bends. Now you look at Tesla, breakout at 400 plus, and then go all the way up to 900 plus, come back down. If you sell at 800 or 700, that is within just like a month. Okay, from 400, let's say you don't know how to sell at a high. Okay, you don't know how to sell at 900 or 850. You sell at 600, for example. From 400 to 600, that's 50% gain. Okay, a lot of people will say, "Oh, it's too high." Some more, this company is not a money-making company. Okay, so that's what we do. We follow the trend. When the trend comes, we enter. That's what basically we do. A very simple concept. Just whether how well can you follow. All right. So after knowing how we actually follow the trends and how trend following works, can you figure out how to trade this? Okay, just look at the chart here. How do you trade this? If you can see, okay, this is like a resistance, okay, like a mini sideway. After the breakout, this is what? An uptrend. Okay, this is an uptrend. Can you profit from this uptrend? Yes or no? Definitely you can. Okay, and then what is this? Okay, this is breaking a lower low. So here is when you sell. And then let's look at this resistance. It's about 2300 and here is 3000. By the way, this is, you are looking at the chart of FCPO. If you know how to trade futures, you know that 700 points means a lot. Okay, 700 points means a lot for FCPO. Okay, for those who don't know, 700 points of movement times 25 ringgit per point, okay, that's how much you get by being in a position for one contract of FCPO. Okay, so it works in all kinds of okay instruments, not only stocks. I'm just trying to tell you that it works in other instruments as well. And what trend is this? This is a downtrend. So in FCPO, you can do short selling. Okay, so if you know how to trade, that's also another opportunity. Okay, now let's look at the next one. Can you figure out how to trade this? Okay, this is an uptrend from about below like 100 plus to or 1000, go all the way up, and then you have a mini consolidation here and it goes up, another consolidation here, and then there's also some opportunity to buy. And this one, you are looking at weekly chart for this one. And then here is the high. If from the high of about 20,000, come back down, if you can sell it somewhere around here, you are still good to go. You are late, okay, but you are still good to go. So this is the power of trend. Okay, this is the power. I don't have to know what is this, but looking at the chart, I know how to profit from it. Okay, and then what is this? You see, this is a high, lower high, lower high, lower high, lower high, lower high. What does lower high means? Lower high means, well, downtrend. What's the logic behind? It means buyers are not willing to buy at a higher price. Okay, and here we can see like a resistance, not a resistance, a support in this case. Okay, a support. Once it breaks a support, and you can see that, okay, this is a downtrend from 6,000 to about 4,000 or 3,000. That's also another crazy 50% move. And after that, I don't want to talk anymore. Okay, what is this? Okay, this is Bitcoin. You are looking at a chart of a Bitcoin. So trend following works everywhere. Okay, you just have to know that uptrend has a higher probability to go higher, downtrend higher probability to go lower. So you want the forces of the trend to work for you, not working against you. So focus on looking something which is uptrending. Okay, which is uptrending. Now, let's continue. I'm going to share with you my 4-step process on how to trade an uptrending stocks. Okay, my 4-step process on how to trade an uptrending stocks. Okay, let's begin. First one, identify the trend. This is great tech before last year, October. Okay, yeah, I'm up until October. This chart is up until October. So we can see that this chart, let me draw. Okay, we have moving up here, retrace a bit, go up, then consolidate, go up, consolidate, go up, consolidate, go up, come down, and looks like going up again. So the overall movement is going up. So this stock, the primary trend is uptrend. How do you know this stock is a good uptrending stock? Now, a good uptrending stocks usually break new high every single month. Now, if it is like a 1-year chart, okay, a 1-year chart, if out of like 1 or 2 months it does not break new high, is okay, but it must consistently break new high. Okay, from my experience for stocks, okay, good uptrending stocks, they are basically breaking new high almost every single month, except if the whole market is down, they kind of like retrace for a few weeks. Maybe that month they are not breaking new high. And how do you know the stock is stronger than the market? Meaning that when the stock market is, the indices around are crashing, the stock does not crash very much. Now, I already give you a hint. Try to look at the market you trade right now, most probably Malaysia. We all know that the market is very terrible recently. And when the market is terrible, what are the stocks that are still actually in a great uptrend, whereby they don't retrace a lot, they don't pull back a lot, they don't crash together with the market? Okay, so that's the thing we have to find out. All right, so let's go to, okay, so the first step, identify the trend. Okay, so the overall movement is going up. The yellow shadow you see is actually means higher low. So whenever the stock has a series of higher high and higher low, that's when we can start plotting entry, and that is step number 2. Okay, now here are some of the pro tips. Okay, look into 1-year time frame or longer to determine the primary trend of the stock. Okay, now if the stocks are newly listed, means less than a year, like this one, this stock back then was less than it's like 3-4 months. Okay, then look at the chart since the IPO. Okay, good uptrending stocks must spend most of their time going up instead of going down. Okay, just like the chart I showed you just now, and the upward movement must be stronger than the downward movement in general. Okay, second, we want to plot an entry. Okay, we want to plot an entry. Now, let me pull out this drawing too. Same chart just now. Okay, now we do not enter during the dip. Okay, like the stock here is a dip. We do not enter during a dip because we never know how low it will go, or will it even recover. Okay, we want to enter after a dip in an uptrend, which is rebound. So this is a significant rebound. Now, if you follow this rule, after end of February, you should not be entering any stocks, most probably, okay, because a lot of stocks are dropping. Now, as a trend follower, when it comes to such buying uptrending stocks, we do not look at the stocks when it is dropping. because we don't know whether this stock will drop until here or drop until here or drop until here. Okay, if it drops like this, then of course we don't want to enter. But if it drop like this and starts turning up, that's a great thing. Okay, that's a great thing, because if the stock turn up, then only we can know that, oh, this is a higher low. Okay, because when it is still dropping, you don't know where is the low, or will it even have a low? Okay, so, and that's the first thing why we don't buy when the share is dropping, because we don't know where is the low. Will it break previous low? We don't know. Okay, we don't know. And then when it turns up, it basically means, well, uptrending stocks, you must be going up, else how I make money. Okay, so turning up, it means the buyer, the bull has taken over. Okay, it is a sign of uptrend continuation. Okay, it's a sign of uptrend continuation. So after that, this green arrow is when you can enter. Now, if you ask me, where should you enter the stock? Okay, now let me give you some illustration. This is like a retracement. Okay, if I just want to use one line to draw, then maybe it will be easier. This is a retracement. Half of the retracement, if you break upwards, you can start buying. Okay, so this is the retracement. Half, you can start buying. Okay, all right. And it also much depends on how big the stock actually retrace. Okay, so but you just remember this for now. All right, so pro tips: have a watch list of uptrending stocks. Wait for them to have a price dip or correction or pullback. Okay, don't directly enter and chase. Remember that uptrend will not go up in a straight line. It will come down somewhere. So if you're looking at the stock right now, it is uptrending, it is high flying, put in the watch list, okay, and wait until the stocks actually retrace. Okay, it will retrace somewhere. Okay, and then after it retrace, don't enter because it's dropping. You enter when the stock actually bounce up and resume the uptrend. Okay, watch and see if the stocks are recovering after a dip. If it does, it means that the stock is showing signs of uptrend continuation. And remember that the new low must be a higher low compared to the previous low. Okay, so those are the things that you will need to know. Now, I cannot stress the importance of how important it is, okay, to have a watch list. It is like going to the shopping mall or grocery store without having a shopping list. You will end up buying a lot of things that you don't want, okay, and end up not buying things that you actually want. That was how most people go to shopping for groceries before the movement control orders. Okay, now everybody brings a shopping list, okay, while we go to the grocery store. Well, because you know what happened. Okay, so a watch list is also as important. Why? Because if you do not have a watch list before the market open, you don't know what stocks to look at, what stocks to buy. You're not going to buy the right stocks most of the time. Okay, so watch list is very important. You have to know that what stocks you are watching. What are you watching for? Okay, am I waiting for a rebound? Am I waiting for a breakout? Am I just watch first? Okay, what's the purpose of you watching the stock? Okay, so that's very important. And the next thing, just now we set an entry here. Okay, this one we set an entry here at about 155. Okay, 155, and here is the previous low. Okay, this is the previous low. So what we want to do is we want to set the stop loss a little bit below the previous low. Okay, we don't set the exactly previous low because the stock might just like go to the previous low and bounce up again. So we usually set slightly below the previous low to give the stock has like some space to squeeze. So maybe you have a trading plan. Okay, you buy a 151 at 155, for example, in this case, and then your stop loss is like 142, okay, about 10%. Okay, about 10%. So after having your entry points, okay, you must set a predetermined stop loss. Okay, a predetermined stop loss which is slightly below the previous low. All right. So, pro tips: never take trades which have more than 10% risk. Why? Very simple. If you take 10% risk, okay, if it hits the stop loss, okay, you need 11% move to earn back the money, to break even. Why? Because if a stock from 1 ringgit drop to 90 cents, and if the stock only goes up by another 10%, it is just 99 cents. You haven't break even. So you have to know this. If you are hitting a stop loss for 10%, you need 11% gain to actually recover. So if you allow your stock to drop like 50%, you need to double the money before you break even. So that's why I set 10%, because if you set 20% loss, okay, stop loss, you need about 25% to just break even. And a lot of people in their entire journey in the stock market, they never see 20% gain in one single stock. Okay, so that's very important. 10% is the maximum risk I would take. Now, most of the time, I would just like myself, okay, just share with you. If I can take not more than 8%, is the best. Okay, if I'm trading stocks, mega cap stocks in the US, usually the stop loss is about 5 to 6% only. Mega cap, I'm talking about stocks like Apple. I'm talking about stocks like Visa, MasterCard, all those stocks. Okay, allow some space for the price to squeeze below the previous low. Okay, so you measure from your entry to the previous low, below the previous low, how many percent is it? It is, okay? So not more than 10%, then that's a good trade. And you can set a stop loss price as a trigger with Kenanga Invest app so that you do not need to monitor the market. Now, how I personally trade the Malaysia market, okay? Let's say, for example, I buy a stock. Let's say I buy a stock at 560, for example, and my stop loss is maybe 530. So after I buy the stocks at 560 and I have a stop loss at 530, okay, I will set 530, which is my stop loss price, as a trigger in Kenanga Invest apps. It is free to use. Please download it if you haven't already. Okay, I used to use Careless Screener, but the alert is like 5 to 15 minutes delay. Okay, Invest is almost real time. It's a lot more accurate and live. Okay, and lifetime. Okay, meaning that it is more accurate. Okay, you won't face things like, oh, your trigger is 530, but by the time the alert come out, it's already 490. Okay, that would not happen unless you don't have a great internet connections. Okay, so Invest is really reliable. I personally use Invest to set all my triggers so that I don't need to monitor the market, because the more you monitor the market, the more emotional we become, and we tend to like, when the stock drop 2 cents, we get nervous. Okay, but from the chart, it's still uptrend. Okay, so I'm a person who don't monitor the market, although I'm a trader. Okay, so Malaysia, you just use Invest apps. Okay, the most reliable one that I have used so far. Okay, now this is basically the same chart, okay, but with higher a longer time frame. So just now we enter the stock actually here, and when the stock move up, okay, move up and forms a low, a new wave, okay, a new wave, we basically just move the stop loss upward. Okay, we move the stop loss upward. Here, okay, you see double bottom, it goes up, okay, we move up. Here, did not hit our stop loss, okay, and then it goes up, come down, okay, then pump. That's when you sell. So you buy a stock at 150, you sell at 310. How great is that? Okay, how great is that? So we basically ride the whole trend until it bends. This is the core strategy, the core thing about trend following. We want to capture the whole trend. Okay. Now, some of you may ask, what about this drop? What about this drop? What about this drop? Looks pretty intense as well. Now, if you're worried about your position, okay, try to trim a little bit. Maybe when the stock drop like this, you are scared. Okay, maybe you sell half, you don't sell all. Okay, you sell half, okay, protect a little bit of your profit, and then the rest you just follow your trading plan just to ease off the emotion you have. Okay, so we move your stop loss every time the stock creates another wave. Be cautious if the stop loss is forming has stopped forming new high. Okay, when the stock hits your stop, walk away with the profit. Now I want to elaborate about this. Be cautious if the stock stop forming new high. Now you see, this is the high and this is a lower high. When a stock forms a lower high and turns down, please sell your stock. That is a very clear indicator that the stock is turning weak. Okay, so that is very important. Now, if you follow this strategy, you should be able to ride big trends when the stocks were to come, the trend were to come on the stocks. Okay. Now, here's the debate: take profit or trail, because a lot of people are not familiar with trailing stock. Okay, so whether or not should you take profit or trail. Now, when the stock is going down, we should be executing our stop loss well. That is, it means it goes against us, then we will be having only 3 steps because we hit our stop loss. When the stock is going up, we are in profit, and there are 2 things that we can do. First, we take profit. Second, we trail all the way up until the trend bends. That's the strategy I've shared with you, trail all the way up. And this highly depends on which type of traders you are and what's your goal in trading. Are you really, you just want to trade a swing, or you want to ride the whole trend? Okay, I call it a home run. Okay, what's your goal in trading? That's very important. Okay, and how comfortable are you to trail? Okay, and traders can also sell half, like I mentioned just now, the position when the profit is 1.5 times of the risk, and trail the rest. Now, what does 1.5 times means? For example, if you buy a stock, okay, if you buy a stock at 5 ringgit, this one is your entry, and your stop loss is 450, for example. This one is your stop loss. So your risk is 50 cents. Okay, so what does 1.5 times means? 50 cents, okay, 50 cents times 1.5 equals to 75 cents. Okay, meaning that, so when the price from 5, when it goes up to, when the stock price goes up from 5 ringgit to 5.75, you sell half, because it has already achieved 1.5 times of the risk. So sell half, trail the rest. I think you will be pretty happy with the kind of result that you are getting, especially when a bull run were to come. Okay. All right. So, and let me share with you, most crashes can be avoided. Okay, most crashes can be avoided. This is Dayang. A lot of people say, oh, Dayang dropped, crash because of oil. Now, before the oil crash, did the stock actually show any symptoms? Yes, it breaks previous low. Okay, it breaks previous low. That's a very obvious sign. So if you follow this strategy, you will be fine. Okay, you won't, okay, stuck in this downward movement. Okay, this one. So that's very important. Okay, because that one is drama. So it is better to sell the stocks, okay, and then don't be in that drama. All right, it's very sad if you stuck in this kind, if a trader stuck in this kind of stocks and they don't know what to do. And right now, if you ask them to sell, stop loss, it will be a painful experience. Okay, so trend following is a strategy. The trailing stop strategy is a strategy that can save you from this kind of situation. You can go and backtest everything with the stocks that are crashing. Every time the stock crash, it forms a lower low and you cut it, you'll be fine. Including stocks like Master, okay, that one is very crazy, from like 1 ringgit plus go to 3 something and then crash again. And it's like limit down. All right, so most crash can be avoided. And Master, this is the one I'm talking about. Okay. And this one, Genting Malaysia, also one of the stocks that a lot of Malaysian like. Okay. When the stock limit down, this chart, by the way, is since like 2017 and 2018. You can see below the y-axis. Okay. It has been in the downtrend. Now, if you follow what I have been sharing with you just now, this is obviously a downtrend. So in a downtrend, don't have to do anything because you cannot short sell. Okay. And then if you take this advice, you won't be having problems here. Okay. So we believe in trends. Okay. Same goes to stocks like Maybank. Same goes to stocks like AirAsia. All right. So I know that a lot of people want to know how the market will behave, okay, during the recent for region crisis. Now, let me share with you what is happening in the market right now. Very quickly, let's look at DJI. Okay, DJI. This is daily chart. If we move to monthly chart, we will realize that this is 2008, the subprime mortgage crisis. And if we draw a trend line, you will realize that, okay, the US market is trading at a slightly below right now, okay, the 10 years trend line. Okay, today is 26. We have like few more days. Okay, we have like actually not much time for the stock. Let's see, we have 27, 30, and 31. We have 3 more days for Dow to see whether or not it can close above this trend line. So if it can close above this trend line, that is a great thing. Okay, that is a great thing. Okay, meaning that the support is working. If not, we may see the stock goes lower, goes back up to test this trend line, and then go lower. Okay, so that's something that I can share. But right now, I cannot tell you that whether or not it is going to go up or go down because I'm not a fortune teller. So what I do is I wait. Okay, for now, for the US, okay, I'm waiting. How about if the US market is crashing like last time? When it is crashing, what I do is I can actually short the market, but as a trend follower, I don't like to trade futures by holding for too long. Okay, so my preference is I actually buy inverse ETF in the US market. Now, let's look at S&P 500. Okay, basically the pattern is almost the same. Okay, now this is S&P 500, and we can see that, okay, it comes down, being a downtrend, and then it goes up and comes down. Okay, so what we can now, when the market is in an uptrend, the popular option for us to buy into S&P 500 is actually buy into the ETF. The popular one is SPY because the SPY actually mimics the movement of S&P 500 because that's the ETF. Okay. Now, when the market is dropping in a downtrend, we do not want to buy the ETF because the ETFs follow the movement of the index. So what can we do? Okay, what can we do? We can buy inverse ETF. So what is an inverse ETF? Inverse ETF is like this. You see, when the S&P 500 is dropping, okay, is dropping. No, sorry. When the S&P 500 is going up, you can see that, okay, it is going down. End of February, when S&P 500 start crashing, it starts going up. So this is inverse ETF. Okay, it works in the opposite direction. Okay, of the what you call the underlying, which is in this case is the S&P 500. Okay, so you can look into inverse ETF as an option to profit from if the market were to crash. Okay, because right now the market is going up. We don't know whether that is the bottom or not, or it will continue to crash. Okay, don't guess whether or not the market will continue to crash. Okay, I don't speculate things. So you see, since the drop, okay, from the high, we are looking at about 45%. And if we calculate from the top of the trend until where S&P 500 is right now, we are talking about 27% gain in the inverse ETF. It basically is like going to terbalik direction, okay, the inverse direction. That's how inverse ETF works. Okay, so that's the first thing. Now, some people may say, I don't know what's ETF. Okay, what should I do? Okay, I don't want to buy all this. It sounds complicated. Can you tell me some shares? That's the only thing I trade. Okay, well, you have the option. Now, let's look at FBM KLCI. We know that this is a good downtrend. Okay, I always say our FBM KLCI is a good downtrend. Okay, now never mind. Our market has been crashing, okay, as well. Okay, follow suit what happened in the global market sentiment. So recently we have a rebound, which we don't know whether it will rebound until when. It could be one more week, it could be 2 more weeks, or it could be that just this 1200 is the bottom. We don't know. But let's say if you think that the market is recovering, you want to start position into the market, what are the options? Okay, for my personal option, okay, my personal choice is find uptrending stocks. Again, it's the same advice. Okay, so look around at the market right now. Let's look at stocks like Hata. Okay, you see, since the end of February, our market has been crashing. And Hata is one of the stocks that, okay, whereby the market is dropping, it is going up. So this is good stocks, meaning that if we are not lucky, the market were to crash again next week, you know that these stocks may have greater strength or greater resistance to protect you against the drop because it has done once. Okay, meaning that this time round it may not be correlated to the market. Okay, now how about we all know that like stocks like Top Glove, okay, is still going up. So put your focus in stocks that are still uptrending. Yeah, that's the thing that I do. Okay, so I'm just sharing with you. How about other stocks? Okay, now Supermax may not be a great choice. Why? Because we have seen series of lower highs and lower lows. So this is not my primary option. Okay, if I can, I trade the big brothers, which is Hatalega and Top Glove within the sector. All right, so what about stocks like Permaju? Okay, okay, this is a fantastic trend. Okay, this is a fantastic trend. So as I say, focus on the trend and you'll be good. Okay, so right now we know that the market has been bearish for like 2-3 weeks. Okay, if during that 2-3 weeks you can find stocks like this which is dropping less than the other stocks, less than the majority, it basically means that this stocks is stronger than the market. Okay, so your job is to find out these stocks and then trade with the strategy that I've shared with you just now. Okay, all right, so basically that is what I'm going to cover in this webinar. So Shen,
Oh, yes, I'm
yes,
here.
Okay, so we have Q&A session. Am I right? I'm on time. Okay.
Correct. So we are now opening for question and answer. So
Yeah.
if any question, please kindly type in the question and answer box, and then we will address. Our speaker will do his best to answer the questions. We have 15 minutes for Q&A, so we may not be able to answer all questions, but we will pick some of the questions that's very relevant to us. Okay, now the first question is, for your strategy that you shared earlier, like take profit at 1.5 times the risk, does it apply to short-term, mid-term, or long-term stocks?
All right, that is a good question. Now, this one would who is asking this question? I think this is a good question. Okay, now, thanks, Sharon. Okay, this is actually we goes back to the basics of trading. Okay, we always want our return to be greater than risk, and this is a habit. I would say this is a habit as a trader. I always risk, let's say 10%, for example, and I want the stock to at least go up more than 10%, maybe 15%, which is 1.5 times of what I'm risking. So this is the habit that traders have to take. We always want to only think about taking profit when we are gaining more than the stocks. Now, because a lot of traders like to do things like this, they can risk like 10%, 20% in the stocks, okay? Like when the stock is 10 bucks, okay? They can risk like when the stock drops to 9 or 8, they don't do any stop loss, okay? It is okay to have great risk appetite, okay? It is great to have great risk appetite, but if every time a stock's drop by 10%, 20%, 30%, you hold. But whenever the stock only go up by 5%, you think that, wow, 1 month go up by 5%, and you think that is greater than FD, which is, okay? And then you sell. So every time when the stock drops 20%, you're enduring the loss, enduring the pain, okay? But when the stock go up 5%, you sell. So your risk and reward ratio in the long run is not going to make you money. So whether short-term, long-term, or mid-term or not, it doesn't matter. You just follow 1.5 times of whatever you are risk, because generally speaking, if you are a short-term trader, by right, you always risk quite small. Your stop loss is very tight. Okay, I hope that sounds logical to all of you. Okay, and when you are maybe like a trend follower like me, my stop loss is always 8 to 10%. Okay, so my 1.5 times should be like 12, 15, or 15%. Okay. If you're a short-term trader, you have been trading short-term in the market, you know that you are trading stocks maybe at 2 ringgit. Okay. You know that your stop loss maybe could be 10 cents only. So that's 5%. Okay. The shorter terms traders go, okay, usually the tighter the stop loss is. So it doesn't matter whether you are short, medium, or long term. Okay. It is, you just follow whatever you're risking times 1.5. That is the first target profit. That is my answer. I hope that my answer actually answers,
Definitely.
yeah,
Okay.
what the person
Yeah.
is asking.
So you need to keep your answer brief if you can, because there are so many questions more.
Right.
Okay. Now, what
Sorry, guys.
factors that you can consider before choosing any stock that can hold for a long period of time?
Okay. First thing, it is still uptrending. That's the first one, meaning that it still consistently break new high without breaking new low every month. That is the first criteria. Second criteria, I want the stock to has previous history of rallying, meaning that in the past it rallied before. I give you an example. For example, Dufu. Last year it started rally again, although previously it actually has a drop, but way earlier than that, it actually has a history of rallying, healthy rallying. So these are the stocks that I would give priority to. All right.
Okay, sure. Can you talk about the your view on the KLCI rebound?
My view on KLCI
Yeah.
rebound. Okay. Now, if we
Do you
talk
think it's a
about,
dead cat bounce?
okay,
Do you think the downtrend will continue?
okay, for me, KLCI is no longer an indication that whether or not our market is good. Okay, because since many years ago, it has been downtrending. Why? Because all the the blue chip, the big caps are not really doing well. And what's running is actually the small cap. So what I can suggest is two things. I realize in Malaysia market, usually the lower liners or the mid caps will run. So you can actually shift your attention to FBM small cap index or the ACE market index, or you just look at the US market to some kind of like get the overall direction, because usually it is correlated when it comes to direction. Okay. So I no longer think that the FBM KLC is a good indication, but whether or not this is a dead cat bounce, we don't know. Just follow the trading plan. If it hit our trailing stop, we just go away. Okay. And of course, I'm still give priority to stocks that are still uptrending, stronger than the market, like Harta Lega, Pemaju. Okay.
Okay.
So I don't speculate what will happen next. Okay.
Okay. Now the next question is about your strategy hit rate. I'm not sure whether you keep track or not. So the question asking, what is your hit rate for your strategy and expectancy? Like how many winning percentage and so on.
Okay. This, whatever I'm sharing today, is actually not a very comprehensive, not a complete one, but from my own trading journal, my win rate is about 65% for this one. But of course, it factored not only the strategy part, it also factored in my personal stock picking appetite. Okay, because I'm a person who don't really like to trade penny stocks. So whenever the stock is below 50 cents or below 1 ringgit, I don't really look at it unless it is real good. Okay, so when you factored in this, mine is about 65%. Because when you start to use the strategy to any penny stocks, because penny stocks sometimes just pump and dump, so the span of the trend can be a little bit shorter. Okay, so that's what I can tell you from my experience.
Okay. Now, there are also people asking, what about Corsan and Rubberex?
Corsan and Rubberex. Okay, if I'm not mistaken, Rubberex is still having higher high and higher low. The only thing is stop loss too big. Okay, Corsan is not my top priority because I do think that Harta Lega and Top Gloves, the patterns are better. This is from technical point of view.
Okay. So the next question we have is, what do you think about Maybank, MyEG, and Genting Malaysia?
Okay.
Which you have just covered, Genting Malaysia.
Yeah, for downtrending stocks, usually I don't speculate when it will start rebound. But I can give you one tips, okay, that I personally follow. If I really want to buy a stock that are like downtrend for 3-4 years, like Asia or maybe Genting Malaysia or Maybank, the first criteria is it must break 1 month high first. So after it break 1 month highs, I want the stock to retrace. Okay, retrace and then rebound again. So this span can be like 1.5 months worth of uptrend that the stock has to prove me that this time you go up, you rebound, and it is really more sustainable than previous dead cat bounce. Okay, so that's the rule that I follow. And generally speaking, I like to trade stocks that are uptrending, like 52 weeks high or all-time high. That's my preference. So I won't put too much attention, but if you want to look at those stocks, of course, there are some workarounds with it, and I've just shared it.
Okay, so the next question is, why do you choose a risk reward of 1.5 times? Can I pick 2 times?
Can. No problem.
So is there a reason you pick
1.5?
1.5? Yeah.
Okay, 1.5 is very simple, meaning that you need at least 40% win rate to break even. So if your win rate is 50%, then you are a profitable trader. If, of course, you can choose 2 times. Okay, this one is based on experience. Okay, this one is based on experience. If you think 2 is good, then I think that would be even better. Just don't pick risk and reward ratio that is less than 1.5 times. Okay, because less than 1.5 times, you need a very high win rate, more than 50%, because you have to consider brokerage. Okay, so I would say 1.5 is more doable for most people. Of course, if you can choose 2, then no problem. Because for a trend follower, the risk, and until we take profit, like Penta, last year my Penta is about 120%. Okay, that one is like 1 to I don't know how much. Okay, so I would say minimum is 1 to 1.5.
Okay, minimum is 1.5, but you
Yeah.
can go higher. Okay, like your
Yes.
Penta as a case study. Okay, so long that you throw your stop, then you can you can maximize your profit.
Yep.
Okay, so during a crash, and if we are stop loss, do we sell all our stocks or just sell half of our positions?
Okay. Usually I will sell all unless I have a better reasons to sell half, because if you sell half, you gotta ask yourself when you want to sell another half. Okay, so usually I will sell all. If it breaks previous low and close below that previous low, the next day I will just sell.
Okay, so for your trend trading strategy, do you only rely on this naked chart like chart patterns, or you also use other indicators to help you to pick a better entry or an exit?
I can trade with or without indicator.
Mhm.
Yeah, so
So for
both
this
ways.
strategy is without indicator lah.
Still workable. If you have the habit of using like EMA 10, 20, 50, the one is up to you. You can mix and match whatever you are comfortable with. But I want to share with you guys is the core belief of trend following is that if it is uptrend, you go higher. Whatever indicate, if you want to use indicators to understand or analyze trend, is entirely up to you. Okay, just that I can do with or without indicator, because I'm afraid that some people may not know indicators, so I don't put indicators. And I would say like 70% of the times I don't look at indicators.
Mm, mm. Okay, so the next question is, how do you allocate your money when you first establish positions? And how do you average up or down? How do we do it safely?
Okay, first I don't average down. Okay, because when the stock goes down, I cut loss. And if I want to top up when the stocks go up, it must go up above 1.5 times. And you have to follow a rule, which is what we call pyramid rule, meaning that first position is 10 lots, the second position cannot be more than 10 lot. Ideally be less. You cannot buy more and more and more, because else your average price will be too high. And how much I enter, I actually have my own position sizing rule. Okay, I cannot explain here because too fast, but whoever can grab it, this formula is like this: your portfolio times whatever risk you want to risk for your portfolio for every single trade. Okay, for example, if a 100,000 portfolio, you want to risk 1%, meaning that 1,000. One stock, chop, stop loss, you lose 1%, 1,000. Okay, that's 1% risk per trade. 100,000, okay, that's your portfolio value times 1%, divide by entry minus stop loss. That would give you how many units you should buy based on the entry and the stop loss. That's the position sizing that I use.
Okay, understand. So at most you will risk 1K lah, out of this example, 100,000.
Yeah, if the stock like gap below my stop, maybe 1 point something, okay, but the risk is still very manageable.
Okay. Now, do you link technical analysis with the company fundamental to guide you in trading?
Most of the time, no. I would
Just
say
mainly on
99%
charts.
of the time, no.
So you don't care whether the company makes money or not, so long that it's trending up lah.
Because for technical analysis, we always believe that all the fundamental, all the news, all the things has already factored in the price. Because technical analysis, we want to study the price, the psychology behind the price movement. So we always believe that whatever news and all those things has already factored into the price. But
Okay.
if you want to use fundamental things to as a support, no problem. Meaning that I want this stock to be uptrending and it's a profitable company, up to you. But please don't, when a stock hits stop loss, you give yourself an excuse that, oh, this fundamental is very good. It hits stop loss. The market panic, so I don't want to sell. You cannot be like that. Okay. It can be something to support your buying decision, but don't become an excuse of not executing your stop loss.
Okay. So the last question is, do you look at daily chart, minute chart, hourly chart, or weekly chart, monthly chart to do trading?
Personally, I look at daily chart because my holding period is about at least like few weeks to few months, sometimes 1 year. Okay, so I look at mainly daily chart, and I can look into weekly chart to find some kind of long-term support and resistance. So
Mm,
that is basically my style of trading. But when it comes to futures, of course, we use smaller time frames. That's a different
Yeah,
Okay.
it's a leverage product, so have to look at a smaller time frame.
Yeah, yeah, that's true.
Okay, cool. So thank you so much, Jin Hao, for spending your precious time with us to guide us how we can do trend following strategy in our trading. So next, we have just now in the chat group, I see that there are people asking, hey, do we have next webinar? Yes, Kananga has arranged the next webinar for you, which is happening on 16th of April, which is a Thursday. The topic is the 11th year US bull market finally coming to an end? Okay, I guess many of you here are very concerned about this, and then with the market practitioner shouting that the bull is dead, now it's a bear market. So now in the next webinar, we are going to talk about whether is the bull really dead or it will rebound shortly. Okay, so the speaker is Derek Tan. So we'll talk about the current scenario. So if the registration link has been shared in the chat group, so you can go to there and register for our next webinar. So it's the same time, 8:30 to 9:45, 60-minute content, 15 minutes Q&A, so that you will learn what Derek thinks about the market right now. Okay, so uh, before we leave, we also want to let you know that there's an account opening freebies. So if you open an account with Kentrade today, Kenanga, so you will get 2,000 B points when you sign up for a Kenanga trading account or through this webinar. So these 2,000 B points can redeem you a cup of Starbucks, or any other things, transfer to enrich miles with Malaysia Airlines and so on. So you can do a lot of things with these B points. So if you want to sign an account with Kenanga, please email them ebs.kentrade@kenanga.com.my. So if you want to take advantage of this, so just in your email address, just email subject, just indicate Kentrade webinar. So when the account is successfully opened, you will receive the 2,000 B points, which can be used at the merchants that sign up with Kenanga. All right, so just go to ebs.kentrade@kenanga.com.my to participate in this account opening freebies. So lastly, I want to thank Jin Hao for spending your time with us today. If you want to reach out to Jin Hao for any questions, just email him at jinhao@streetfinance.net. Okay, this is Shane
Yep.
Chu. I want to thank all of you for spending your evening here, and in this COVID-19 outbreak, please do our civil duty, stay at home, and do diam diam. Okay, don't go out unless it's necessary. Okay, now thank you everybody. This is Shen Chu signing off. Okay, bye bye. Remember to fill out our survey form sent to you. Bye everybody.